Right, a very good day, everyone. I just had someone who just joined us. Quickly, I will. I hope everyone is good and having a great afternoon and ready for us to participate in today's class. In today's class, as we have covered the previous time, we'll be covering few important aspects with regard to Learning Unit 2 and Learning Unit 3. So I hope I will be able to help in terms of understanding better. But just for quickly, there's only one slide that I just want to cover, which is very important. Please switch off your video on your side. All I'm asking is you switch off your video, you mute your microphone. Please ensure that on the meeting chat, you can click there and complete the link to complete and verify your attendance. Any study-related information, it can be sent to ctntat@unisa.ac.za. At the end of the class as well, we will also have some feedback that you can also apply. Thank you very much. So we can begin with the rules set aside. So I just want to emphasize that we are completing Learning Unit 2 and we are moving to Learning Unit 3. So what we'll be covering on Learning Unit 2 is basically the questions, and then we move over to Learning Unit 3. And I'm hoping that on Learning Unit 3 we will stop when we are dealing with provisional tax method, and then we'll try to cover it on the third class so that we are able to cover it from all bases to ensure that you have proper understanding of the rules that are applicable there. If I'm calling the name correct, Ndivuo, do you mind if you can just switch off your video? You will continue to see me, you'll continue to hear me, but all you just need to do is to switch off your video on your side, and you'll be seeing my video and you'll be seeing the information that I'll be presenting. Thank you very much. So great. Let's start quickly and go over to the questions that we are going to be covering from Learning Unit 2. And immediately we are going to jump over to Learning Unit 3. Learning Unit 3 is the important one that I wouldn't want you to miss by any chance. So I'm quickly going to share my screen. And then quickly going to two questions. Then after we have done with the questions, then we'll move over to Learning Unit 3. Just wanted to see something whilst I'm share. Right, you can perfectly see my screen and you'll be able to follow me wherever I'll be going. Right, we are going to be on Learning Unit 2. And then we're going to be covering the questions there. And then after the questions, we are going to move over to Unit 3. These questions will also help you to recover what we have 1 and learning unit 3. So, question 2.1 begins and says, discuss how John Majale, Pty Ltd, a newly registered South African company, will register as a taxpayer for the first time. Also list what the information the company will need to complete the form. And you are also informed that you can also visit a SARS website, which can also help you in this process. But quickly, you are welcome to answer in any format. Quickly, anyone who has got an answer to this question? That there was a problem with the sound that was happening in the background. Can you just quickly confirm if you still are experiencing the same issue? All right. There is someone that I may just ask if they can just quickly unmute themselves with the other background. I'm glad that all is sorted now. Happy to hear that feedback. All right, let's move on. And please, if I do not by any chance pick up any important matter that you want to raise with me, please quickly unmute yourself and inform me of the background that on how the background is. So we are going to be tackling learning unit 2 and 3 today.
Hi. Sorry to disturb you, but Catherine is all I can see. I can't see your screen. Catherine's video is taking over the whole thing. Sorry.
Just stop sharing. On my side, I also cannot see Catherine, not at all. Right, let me try to share again. Can you confirm if
Hi,
everyone? Yes.
Thank you, it's better. Thank you.
I just want to ask, before we continue, how does one access the record after the class?
The link for the recording will be shared. So if you can be able to come back to the chat, the link for where you get the recording will be shared. But that is found on if you're joining from my UNISA, you'll be able to pick up the notes, and you'll be able to you'll also be pick up as well the recordings that have been put there.
Okay, thank you.
All right, thank you for that. So we are looking at 2.1. Quickly going to go over to 2 questions. So we are looking at your study guide, question 2.1, which is on page 35, 2.1. So we're just going to work on an exam technique on these questions. And then immediately after we've done with these questions, then we'll move over to learning unit 3. So first question asks us to discuss ask us to discuss how John Majale it is to discuss how John Majale Pty Ltd, a newly registered South African company, will register as a taxpayer for the first time. Also list what information the company will need to complete on the form. So there is two important aspects about the question. Question one is asking you, one, how will a taxpayer register for the first time? Then the second question is, list what information the company will need to complete on the form. If I may just have a bit of an interactive session, what do you think a taxpayer must do in order to register in South Africa? Anyone can just unmute their mic and share their side.
He must first earn an income, and then thus he would be able to register for SARS.
Right. You must earn an income to be able to register for SARS. Anyone else? All right, let us move on. So to be able to register at SARS, you must either be earning an income, or you must, in terms of the projected income that you are looking to earn, it's what triggers you to register as a taxpayer, is knowing that you're going to receive an income, and the income needs to be declared to South African Revenue Services. And other employers may request you to provide a tax number if you are going to be employed by them, for them to be able to adhere and comply to SARS by paying your pay as you earn monthly over to SARS. So in this case, the question is asking now, John Majale Pty Ltd. Now, we are going to be dealing with this part when we are dealing with Learning Unit 3. John Majale Pty Ltd. Pty indicates to us that this is a private company. So how will a private company register as a taxpayer for the first time? So two things. A representative of this company needs to visit a SARS branch, or they need to complete any information in terms of the registration as a taxpayer via e-filing. So we know that at this point in time, SARS has opened more avenues in terms of trying to maintain social distance as well, by availing more online facilities for registration, returns, and any disputes that a person may have. So two options: going to a SARS office, SARS branch office, and applying to register, obtaining forms that needs to be completed, or going through e-filing to be able to register as a taxpayer. So important things to fill on the information from SARS is definitely how to identify the company, the registered name, the name that it is using to trade, postal address, company registration number, the nature of business, the turnover that is estimated, the registration, the full banking details, the particulars of the person who is nominated, who has a proxy to actually register the business, and of course, income details if the company is already trading, but if the company is not trading, it will provide how the company intends to pay for tax in terms of provisional tax method. So we'll be covering that, including, very important, the company will also highlight on the registration what is their financial year end, which becomes the year of assessment. So number 2 is asking, in the case now that John Machale is registered and they do not agree with the tax assessment issued by SARS for the current year of assessment. Now let's stop there. I want you to recall 2 things. When you are submitting information declaring your income and your deductions, capital allowances, capital gains to SARS in the form of a return, what SARS gives you back in terms of a reply is called an assessment. So you do an income tax return, and when SARS gives you a feedback, it's called a tax assessment, which is issued by SARS. So in this case, you are told that a wear and tear allowance of 12,500 claimed as a deduction on the submitted income tax return was disallowed as a deduction in the assessment process. So the ITA 34 tax assessment issued by SARS reflects an amount of 4,750 due and payable to SARS. Now I want you to mark important words. This is due and payable to SARS. There is no time period, which means it's due as at now. So the question is, discuss the process that John Machale should follow in order to object the issued tax assessment. Now I want you to do a bit of reflections. You may also on your side go through Learning Unit 1, specifically page 20, which informs you of when you are starting an objection process, what do you need first? So 1, the form that you would need is called a notice of objection. So because you are dealing with a income tax, so if you were dealing with other taxes, you would complete a alternative dispute resolution 1 form. So in this case, we are completing a notice of objection form, so an NOO. And then we're going to complete the details, the company details, and then we're going to set and put all reasons why we are objecting the assessment provided by SARS. So we would submit this via e-filing, because once the company is operational, it will most probably be working on e-filing, or you will visit the SARS branch office. You will ensure that the reasons which you are providing as to why you are disagreeing with the tax assessment will be brought forward to SARS as supporting documentation. So you will provide supporting documentation of why you think the wear and tear allowance of 12,500 was correctly claimed as a deduction. Now, very important, when you are responding in an objection, you must ensure that the objection is submitted within 30 business days from the date of an assessment. 30 business days from the date of an assessment. Now, you must also remember, in terms of the Tax Administration Act, the burden of proof is on the taxpayer to prove why the tax assessment issued by the Commissioner of SARS is incorrect. Now, if after the objection, you receive a response from SARS that informs you that they are still not allowing a deduction of 12,500. Now, the next process that you have, it is to lodge an appeal. So you will complete a notice of appeal form, NOA form, and you're going to be submitting it to SARS branch or SARS via e-filing. And if the matter still cannot be resolved, the matter is taken up to the tax board, because the amount of 12,500 is under the 500,000 limit that the tax board can deal with. If the matter is not resolved, then the next option that you have, it is to follow the legal remedies that you have. One, it is taking it straight to tax court, straight to the High Court and the Supreme Court. And if the matter has got a constitutional violation in terms of the rights of a taxpayer, then it's taken up to the Constitutional Court. So that is the process that you follow. Now, the next one is, now you have been told that an amount of 4,750 is due and payable to SARS. So the first thing, it is to pay that amount. That amount must be paid with no questions asked. The amount must be paid immediately to SARS. So what did we say first? You have to submit an objection to SARS within 30 days from the date of assessment. 2, you must put your objection in writing, specify the reasons why you disagree with SARS disallowing you a WNT allowance. You must also provide financial statements, supporting documentation in terms of your income tax calculation, that you can provide how you believe that your initial tax return was actually correct. And you must ensure that the objection itself is signed by an authorized person, a representative of the company. Most importantly, you must make sure that the amount that is the 4,750 is paid to SARS. So number 3 is almost asking the same question, but is asking the appeal process. So I've already gone through the appeal process that is in there that one can follow. But what's important is the amount that is due and payable to SARS has nothing to do with your objection and appeal process. That amount is due. If that amount is not paid, it attracts an interest and penalties. So if you do not pay an amount that is due by SARS, then you are going to be paying penalties, and then you are going to be paying an interest. So let us look at question 2.2. Majuba Pty Ltd, a private company, was issued its 2019 tax assessment on 31 January 2020. The accountant of Majuba has issued assessment, has reviewed the issued assessment, and he disagrees with the disallowance of capital allowance claimed of 15,500. The ITA, which is the tax assessment, income tax assessment, reflects an amount of 6,875, which is due and payable on or before the 31st of March 2020. The accountant submitted an objection against the issued tax assessment on 14 February 2020. SARS declined the objection on 15 March 2020. So you are asked now to discuss what procedures, if any, Majuba Pty Ltd may follow to rectify the incorrect 2019 tax assessment. So In this case, one, Matua has already objected. We do not hear anything that they have paid 6,875, that is due. So one, they must make sure, I just want to see if I can be able to quickly put down some of the points here. All right. I seem not to be able to edit this document. All right. But one, Machuba, we are told, has already received a objection declined on this date. We are informed that the amount is payable on the 31st of March. We are informed that the objection was done on the 4th of February. So one can be able to determine that one, the assessment was done within 30 days because it was only 4 days from the 31st of Jan. We are informed the objection was declined on the 15th of March. So if we initiate a appeal process, this means that we'll be starting an appeal process on the 16th of March. And we will lodge an appeal via e-filing or by visiting the SARS office. But by the time that we are lodging our appeal, the amount of 6,875 will already be due and payable. So which means we have to lodge an appeal and we have to pay an amount outstanding of 6,875 before or by the 31st of March 2020 to avoid incurring interest and penalties. The appeal will be on the notice of appeal form. It will contain the details of tax dispute, grounds of appeal. If SARS rejects the appeal, then we'll take it on to the tax board, and then after the tax board, tax court, and then the high court. And up to can we quickly ask the person who just joined now to mute themselves? Sorry, I'm quickly just want to look for this person so that I can just quickly. I'm just looking for this person so that they can just quickly mute. All right, I've muted the person. I've found the person and I've muted them. So we may proceed. Apologies for that. So then the process that would follow is the normal legal remedies. So question 2.3 is also following the same thing. What are the administrative steps to lodge an objection and appeal? SARS has to keep a register of all disputes, list 5 elements that must be recorded by SARS when a dispute has been settled. So the 5 elements are the settlement between SARS and the taxpayer must be in writing. The explanation must be given of what was the issue, how the issue was settled and how will it be treated in future, what each of the parties agree to do with the information, if any party will be withdrawing the objection because now they've already settled, if there is any amount being owed, how those amounts are going to be paid, and of course, if it's the taxpayer that won in terms of the objection, SARS will have to change the taxpayer's assessment, and after the assessment, whatever the assessment is, it will be final. It cannot be subject to further objection or appeal. And before the SARS does a reassessment, there will be an agreement based on what was the amount that was involved, and whether both parties have agreed. So the rest of everything is something that we have covered. So please, very important, before we go to the next study unit 1, we learned about the different types of taxes. We've learned about different acts, such as your Income Tax Act, Tax Administration Act. We've learned about VAT. We've learned about different taxes, such as your estate duties, your VAT, your dividends tax, donations tax, your excise duties. We've learned about all of those taxes. We've been able to classify them into whether they are direct, indirect tax. We know what is wealth tax, consumption tax. We know progressive tax. We have learned about so much. We have learned about the process of registering as a taxpayer. We have learned the process of doing an income tax return, receiving an assessment from SARS. And if you are not happy or have a disagreement with how the assessment was done, you know what options a taxpayer has. One option being to lodge an objection. Very important, lodging an objection within 30 days within 30 days from the date of the assessment was issued by SARS. We have learned about the appeal process. We have learned when the amount is due and payable by SARS, you must pay it before you initiate your appeal process. We have learned about other legal remedies that are available to you as a taxpayer should the tax board deny side with the commissioner. We have spoken about when you are completing a notice of objection or alternative dispute resolution, when you are objecting or appealing, what information must be contained there. We have also discussed in terms of question 2.2, what exactly must be written in the register of cases by SARS where a dispute was settled between the taxpayer and the commissioner of SARS. So we are now going to move over to learning unit 3. I just want to take if there is any questions with what we have covered so far. Study unit 1 and study unit 2. All right, lovely. That means we may now proceed to a bit of a difficult unit. And I wish to highlight, as we are going to be studying this unit, one is we are going to go through a list of different types of taxpayers. We are going to discuss their specific characteristics, tax consequences. We're going to deal with the requirements in terms of the definition of a small business corporation, a micro business. We are going to also deal with the tax liability for each of the different entities. And then we are also going to discuss very high overview, first, second, and third provisional tax payment of a company. So that's what we are going to be covering quickly. So let me quickly share my screen. And we are going to be working on populating this information. So I want you to be concentrating on your 102. On my side, I will be working on this information in front of me. So, which is populating this information, and this is so that I can help you to understand how to deal with different types of taxpayers. So we're going to start with the first one up until we can be able to finish all of them. So on page 40, you are told that there is various taxpayers that are covered in this learning unit, and each entity type has unique tax consequences in line with the Income Tax Act that may affect how SARS collects their income. So what has been highlighted to you as important is the fact that South African resident taxpayers and non-resident taxpayers are dealt with separately. In this learning unit, we're only going to focus on the profile of South African taxpayers. So we're not going to deal with non-resident entities. So the first type of a taxpayer that we have is called a sole trader. Now, in terms of the definition, you are told that a sole trader is not a separate not a legal person. So I'm just going to read the definition and explain it. So a sole trader is not a separate legal entity. It is therefore not a separate taxpayer. The profits made from the business must be added to the taxpayer. For example, any profits in terms of the. So when we are dealing with a sole trader, we are dealing with a person that is doing business. So we are dealing with a person, for example, a plumber who may be doing a business under a business name, but the business name is actually just a slogan and also for branding purposes, but it's not registered as a company. It's registered, it's not even registered, it's just being used by a sole trader. So the profits that are made by the sole trader, they are immediately shared to the person. In fact, even the bank account will be that of the person. So the profits will be distributed to the personal bank account, whatever income is coming in, and the method of tax that will be applied is the provisional tax method. So how does the provisional tax method apply is you do not pay tax immediately, but you pay tax at applicable periods. So we're going to be discussing that part again. So here we are dealing with a sole trader who is paying tax on the profits that have been made in terms of the provisional tax collection method. So we're going to be covering as well What does tax collection method actually mean? So, what do I mean by provisional tax collection method? What is meant by this is the taxpayer would be paying monies to SARS, but they will not be paying as they are receiving an income. So they will be paying at in terms of provisional tax method, they will have an opportunity to pay either on the first 6 months, the first provisional payment, or paid on the second payment and the third payment. So those are the options that are available. It's paying on the first 6 months and the second 6 months and the third, which is the final assessment. So if you're looking at these three periods, mostly taxpayers use 2 periods for first payment and for second payment because they cover 1 full year. So you pay the first payment within 6 months and then the second payment on the next 6 months. So why did SARS implement this method called provisional tax collection method? It was mainly because of the recoverability issues, where SARS was trying to recover some monies, and because when you are doing your income tax return and you see the amount that you owe by SARS, you would say, I do not have cash to pay this amount because I've not been getting business so far. And that led to SARS having so much bad debts that SARS needed to write off because the income was just not coming. So SARS ended up implementing this provisional tax collection method where a taxpayer has got 2 opportunities to make provisional tax payment. So we are going to learn at a later stage of what is the formula or what are the assumptions that you follow in terms of implementing provisional tax collection method. So the tax rate that is applicable for a sole trader will be the individual's tax tables. So the requirements to be a sole trader, really not any requirements. You can conduct your business, you can have your spaza shop, you can have any trading that you can do on your own, and all you will need to do it is to declare the income that you have earned by SARS. So the second one that we have is a partnership. A partnership as well is not a legal person. So when I'm saying legal person, I'm actually saying it's not a juristic person. So it's not a separate legal entity. It is formed by partners, and the partners that form it, they actually make profits or losses, but the profits or losses are distributed to the individuals. So in terms of the tax treatment, the partners will be taxed and not the partnership, because they are the ones that are going to be sharing the profits or the losses. So in terms of calculating taxable income, we focus on the taxpayer, who is the individual who would be receiving money in their hands. So similarly, when you are in a partnership, you will not be pay as you earn, as you are earning monthly, but you will need now to pay in terms of a provisional tax collection method. So provisional tax collection method, there is a tax payment which is due within 6 months from start of year of assessment. Then there is a second payment. I will be sharing this as well. Then there's a second payment, which is also due within 6 months from the first payment. We're going to be covering this as well at the later stage. There is also a third payment, but I will cover the third payment when we are doing that part of provisional tax collection method. So similarly in a partnership, I've said it, it's partners that share the profits, and it is paid to an individual person. They are taxed in terms of the individual's tax tables. So the next one then that we focus on is companies. And of course, there is references which you can you are given to study more information in terms of the sections provided. So, for example, under partnership, we are told that we must look at 3.3. So I just want to quickly give you what is the introduction given on 3.3, which is not covered in your textbook. I mean, in your study guide. One, we are told here, a partnership, it's a legal relationship arising from an agreement between two or more persons. It is not defined as a person in the Income Tax Act, and for income tax purposes, it is therefore not regarded as a tax-paying entity. So how we are looking at the tax consequences in terms of a taxpayer, we are looking as to whether Income Tax Act is actually saying a partnership is a person or not, and both sole trader and a partnership is both not regarded as a person. So sole trader, you are trading in your own personal capacity. A partnership, as much as it is a legal relationship, which can be written or can be verbal, but the partnership itself is not regarded as a person in terms of the Income Tax Act. The partners who formed the partnership are taxed in their individual capacities, and the tax that is used is the individual's tax tables, which we look at. And of course, I've already explained that part that says the method to collect the tax applied is the provisional tax collection method. So in terms of companies, now in terms of Income Tax Act, a company has got a wider than the normal legal definition that you would find in terms of Companies Act. So in terms of Income Tax Act, the legal definitions include South African companies, South African public companies. This includes your universities, South African Reserve Bank, foreign companies, cooperatives, South African charities, foreign collective investment shares, close cooperation as well is defined as a company. It is defined as a company in terms of Income Tax Act. Now, one important thing about a company is we have found that it is a legal person. We know that the tax rate of a company is 28%. And now we're going to cover more and more many things. Now, for tax purposes, you've got public and private companies, you've got a close cooperation, which is also defined as a company in terms of Income Tax Act. Sorry, I need to quickly try to mute. I quickly need just to mute. Yes, the person is already muted. So in terms of the companies, you've got private and public companies, which are both registered in terms of your Companies Act. But in terms of Income Tax Act, if a company, it's a private company, it is also a private company for tax purposes. And such company can never be classified as a public company for tax purposes. So why do you have a public and a private company? In terms of the public company, they are exempt from donations tax. So there are exemptions that are applicable to public companies, including companies such as public benefit organizations, corporations, insurances. So there is a couple of exemptions that they have. So what we follow is we follow the principles of a private company. And in terms of the collection method, as well for private companies, the method of collecting tax is via a provisional tax collection. It's via a provisional tax collection method. Now, for companies specifically, I do want to iterate this point for us to discuss it and for you to understand it. The year of assessment, I think I must just maybe open it here. So year of assessment, right? The year of assessment of a sole trader is from the 1st of March to the 28th or the 29th of February, the year of assessment. Okay? But for companies, this is different. And this is informed by it's also informed by a budget speech that is given by Minister of Finance every February. So you've got different companies that would have different year ends. You may have a company whose financial year falls within Jan to March 2020. I'm going to make these examples. And then you've got a company whose year end, so this is the year end. It's April to December 2020. And then you've got January to March. Let's say, let's use the period that has passed. Right. So here, what do I want to emphasize here is If the company's year end is, say, January to March 2019, and remember, a budget speech is done on the 28th of, on February 2019. And during the budget speech, the minister announces tax rate changes. And when the minister announces tax rate changes, the question becomes, in terms of these companies, whose year end would be January to March 2019, April to December 2019, and January to March 2020 year end, which tax act would be applicable when calculating their taxable, in fact, their tax liability. Now, in terms of the tax rate to be used for Jan to March 2019, we are going to be using 2018 budget speech. We are going to be using 2018 budget speech. And then only for those companies whose year end ends between January and March 2020, we would use a 2019 budget speech. Why is this so? This allows for these companies an opportunity to implement the budget that was given on the 2018 budget. If they would consider using the 2019 budget, the systems of the company would not be able to be flexible, to take the changes that have been made whilst the changes were made during the year. So, for example, if you recall, when the VAT Act, the VAT rate was changed, many retail shops were not able to deal with the overnight change. Their systems were not ready. They could not, after the 31st of March 2018 to the 1st of April 2019, they could not at all adapt in terms of their systems fully to the increase of 14 to 15% of VAT rate. So that's why, as customers in that period of April, we never relied exactly on the prices that were shown at the shop. We knew that we needed to have a provision for the little increase that we needed to cater for. So this is covered as well on page 42 of your study guides. So it tells you what budget speech is applicable to what kind of year end of companies. So in terms of the year of assessment of companies, it depends on the year end of the company. So it depends on year end of the company. So we move on. The nice thing, of course, about a company is it has got a flat rate of 28%, which makes things easy for you. So the next monster one that we go to is called it's a company, but it's called a small business corporation. Small business corporation. Normally, it's also, we use the abbreviation SBC. So what is by definition a small business corporation? It is a special type of a company for tax purposes, and in terms of the requirements, or call it a definition, there is these things that are applicable to a small business corporation. One, and this is not covered in your study guide, so please try to find 3.5 in the textbook. This is characteristics or the requirements that makes a company to be a small business corporation. One, a small business corporation is any corporation any close corporation or private company. I'm going to try and limit it to what you need to know. For private company, all shareholders must be natural persons. Please note this must be for the entire year of assessment. The gross income must not exceed 20 million. This is for a year of assessment. Very important as well, none of the shareholders must have interest in other companies. Lastly, investment income and income from personal savings must not make more than 20% of revenue, receipts, and accruals plus capital gain. So we'll unpack on this again. So these are the requirements that make a small business corporation. One, to be a small business corporation. I mean, a small business corporation. You must be a closed corporation or a private company. All shareholders must be natural persons. For the entire year of assessment, gross income must not exceed 20 million. In the year of assessment, none of the shareholders must have interest in other companies. Investment income and income from personal savings must not make more than 20% of revenue receipts and accruals plus capital gain. In terms of the tax rate, there is a small business corporation tax rate. A small business corporation is a legal person in terms of Income Tax Act. And in terms of the year of assessment, it also depends on the year end. The method of tax to collect tax is also provisional tax collection method. Now, I want us to focus on examples where we are going to be looking at examples of covering a small business corporation. So I quickly want you to look in your study guides. You are given on page 43 at the top the tax tables of a small business corporation. Yes, I forgot to cover these important areas as well. And this, I am emphasizing this because by the time that we are covering, by the time that we'll be covering allowances, this needs to be known already. So one of the benefits of a small business corporation, and definitely this is a benefit, and I think since it's a benefit, I must try to cover it on its own. let's call it benefits. So the rest, it's not applicable. I'm going to cover it only for the two taxpayers that we are going to cover. So if, as a small business corporation, you purchase a manufacturing asset, on the first year that you are bringing that asset into use. So two things now. I want you to wear both your accounting cap and I want you to wear your tax cap. One, accounting cap says when do you start to depreciate an asset. So you depreciate an asset when it is ready for use. So if the asset is available for use, honestly, there is nothing that you can do, but it's only when it's ready for use. So which means management has looked at the asset, they've made it available, and they've made it ready for use. For example, if you, as a company, you build a building, which is to be used for work purposes or as a factory. Now, the business, the building is complete. It is available for use, but it is not yet ready for use. So it's only depreciated when it's ready for use and not when it's just available. Similarly, on a tax perspective, it's only when you bring an asset to use for the first time that you will be able to apply wear and tear or allowances to write off. So in this case, if you purchase a manufacturing asset, which is plants or machinery, plant or machinery, first time in the business, and the plant and machinery are going to be used for manufacturing purposes. So on the first year that you bring the asset to use, so it's either it's a plant or it's machinery, and this is a manufacturing asset. Manufacturing asset, you are going to get 100% write-off in the first year that you're bringing it into use. So this is applicable in the first year when it's brought to use. Similarly, if it's a non-manufacturing asset, so if it's still a machinery, plant or machinery, but in this case, it's a non-manufacturing asset. Non-manufacturing asset. The write-off that you are going to apply is you are going to apply it over 3 years in terms of the first year being 50%, the second year being 30%, and the last year being 20%. So what does this 50%, 20% actually mean is this is the deduction that you will have. In accounting, we call it expense. In tax, we call it a deduction, capital allowance that you will have in terms of the asset. So for example, let's say you're a small business corporation and you purchase a plant which is 300,000, which is going to be used for it's a manufacturing asset. So when you are doing your taxable income calculation, you will have year income, which will be whatever amount it is, your income. Then you will have your exempt income, you will have your deductions, After your deductions, you will have capital allowances. Now, under capital allowances, you will have a section applicable for doing a full write-off. So you will have 300,000 as a full write-off. So 300,000 will be a full write-off. This is actually what it means. So which means that you will be paying lesser tax because of this 100%. Now, if this is a non-manufacturing asset, if it is a non-manufacturing asset, it means that on the first year that you are bringing it to use, you will say 300,000 multiplied by 50%, and you will be able only to claim 50% in terms of the allowance. If it is the second year, you will claim 30%. If it is the third year that you are doing the income tax return, it will be 20%. So this is what this means when we are saying benefits of a small business corporation is one, on manufacturing assets that you purchase and you bring them to use on the first year, you can be able to get 100% deduction on the capital allowances. And then on the second year, if it's a non-manufacturing asset, it's 50%, 30%, and 20% on the first, second year, and third year. Right. Now, I want us to quickly move on and look at the example provided. So at the top of page 43, on the study guide, you've got tax tables or tax rates. It's a tax table and it's tax rates applicable for a small business corporation. Now, if you look at it, you can already pick up that as long as you are making an amount less than 550,000, you are paying less tax. So the only time that you are paying 28%, it's when it's an amount that is exceeding 28%. Hence, by definition, we say a small business corporation, it's a special type of a company because of the special rates that are applicable in terms of the taxing. So let us look at an example provided where we are informed that calc. So for the sake of ensuring that you will be fully understanding what we are covering. So I am not going to make that example. We are going to say, let's say the taxable income is 680,000. So instead of that 600 that is provided there, I want us to focus on if the taxable income is 680,000. So you quickly have 5 minutes. No, that's too much. You quickly have 2 minutes for those that came through whilst we were proceeding with the class. Please remember to quickly make sure that you have completed an attendance. Please make sure that you have completed the attendance. I hope the sound has gotten much better again. I'm not sure what would have made right. Snatemba, the non-manufacturing assets is any assets that you are not using in the manufacturing process. So the question will inform you and say it's a manufacturing asset, it's an asset that will be used in the manufacturing process, or the question will inform you. Yeah, I will quickly open the screen again. So the question will inform you whether it's an asset used in a manufacturing process. If they do not tell you that the asset is used in the manufacturing process, as a student, you must immediately make an assumption that that asset will not be used in a manufacturing environment. So basically, we are going to be doing questions as well next week. When we're covering the questions, one of the things that we will pick up is you'll be informed a company is a small business corporation as defined, and it is a company that is you'll be told that it's a manufacturing company. It manufactures sweet, it manufactures whatever the product would be. So you'd be told. So I quickly want for those who have attempted to do this question to quickly tell me what is the tax liability of this company. For those who were able to calculate for 680,000 using the tax rates that we have at the top of page 43. Anyone who has got to answer?
Is the liability 188,870?
One person says 188,870. Another person says
95,270.
5,270.
No, 95,000.
Right. Another person.
Yeah, sorry, I didn't do at 28%, 95,270.
Is there another person who did not get this amount? All right. Let's quickly speak about the steps that you follow to be able to get it. Was there anyone who has a different amount? All right. For practice purposes, please look at 350,000. Look for me for 420,000 because I need to make sure that we are fully understanding exactly what we must cover. If it was 350,000, how much is the tax liability?
For 350,000, it would be 18,970.
All right, that's noted. Any other person? Any other person who did not get That's correct. Let's look at 420.
Hi, Mr. Mpisa, I'm totally lost. I need the explanation on how are they calculating it, please.
No, that's fine. We'll get to that just now. No, it's fine. We'll get to that now. Just thanks. Anyone 420,000?
Is that 31750?
31. Are you sure it's 750?
Check.
You want to check quickly so that I can quickly explain to the whole class?
31570.
Ah, lovely. All right. Let me explain it to the rest of everyone. A small business corporation, it's a legal person. For calculating tax rate or tax liability, you have to use the small business corporation tax rates. So the tax rates are available above page 43. So if you're looking at page 43 on number 1, you will see that you've got tax table provided there, which shows a sliding scale. And you are told that this is found on Appendix A of the prescribed textbook. So last week, when someone asked me what has changed between previous year's textbooks and now, this is what has changed. It is the Appendix A. So this is the first change that we are noting that has changed is Appendix A. So how do you do the calculation is you are informed that you've got a taxable income. So you already have income, deduction, capital allowances. And the question asks you to calculate a tax liability. So what is a tax liability? How much is owed to SARS? So this is what tax liability means. How much is owed to SARS? So in terms of on page 43 of your study guide, you will find that the first line says you are paying 0% tax on the first 79,000 of taxable income. So which means if you were making, say, 70,000 taxable income, this means that you would not pay any tax. The second one says if you are on income that is exceeding 79,000, you are going to apply 7% tax, but only on amounts that do not exceed 365. So the amount will exceed 79,000, but must be less than 365,000. So let me just summarize this fully here. So it's 0% if the amount is 79,000. It's 7% on amounts that are exceeding more than 79,000, but less than 365. So this is how your tax table is. And the next one says 21% tax on amounts more than 365,000, but less than 550. And from here, we start now saying plus 20,000 and 20 rand. I'll explain that now. And then on 28%, we say more than 550, more than 550,000, and then we continue to say plus 58,870. So let me quickly explain this. So this means that this is our tax tables for an SPC. So what is going to happen now if you are calculating a tax liability? So we already know. So you've got a taxable income of 680,000. The first thing that you must look at is on which line item has this covered. Sorry, I just need to quickly mute that person. If I can just quickly find them. Matiba, can we just ask you to please switch off your video?
Thank you, I'll do that.
All right, and unmute yourself as well as you are joining. So we are on page 43 of the study guide, and these are the examples that we have of an SPC. So this means we look at this amount of taxable income, on which line item is it applicable. So we can already see that it's applicable on the last line. We can see that it's applicable on the last line. So which means when we are doing the calculation of tax liability, we are going to say the first 550,000 is equal to 58,870. This is what this means. Then what you need now to do, it is to say 680,000 minus 550, because you are looking at the amount that exceeds 550, and that amount is 130,000. So you say 130,000 multiplied by 28%. You say multiplied by 28%, which gives you 30,400. And then the tax liability is 36,400 plus 58,870. Plus 58,870, which gives you the amount of 95,270. Similarly, when we are covering for 350, we're going to look at which item is applicable for 350. We can see that it's this one, where it says not more than 365. So this is where we find 350. So what are we going to do here? It's quite straightforward. We're going to say 350,000 multiplied by 7%. That's all that we're going to do. Sorry. So what we're going to do is we're going to say, because the first 79,000 is tax-free. So you're going to say 350,000 minus 79,000, and then you get 44,000. 350,000 minus 79,000, and you get 271,000. So 271,000 is the only one which must be taxed. So you say 350,000 minus 79,000. So that's basically what you do. And then you get 271,000. And the tax applicable is 7%. Then you say 271 multiplied by 7%, and you get 18,970. For 420,000, we look at which line item is applicable, and we find that it is this line that is applicable, which exceeds 365 but does not exceed 550. So similarly here, you follow the same thing where we say 365,000 is equal to 20,020. That's the first thing that we know, is that the first 365,000 is equal to 20,020. Now, what we must establish now is how much we should calculate. It is 420,000 multiplied by 21%, because that's the 420,000 minus 365,000. So this is how much should be subjected to tax. It is 55,000, and the 55,000 will be subjected to 21%. So which means that we are going to say 55,000 multiplied by 21%, which is 11,550, and then we are going to say 11,550 plus 20,020. So let's stop there. That's how you get to everything. So is there any questions on this? All right, I guess we do not have any questions. And
Sorry.
Yes.
Hi, sorry. Why did you minus 350 from the 420? Why didn't you just minus 79?
All right. So we look at the line that's applicable for the taxable income of 420,000.
Okay.
So which line is applicable? It is this one that says that the income must be more than 365,000, but less than 550,000.
Yes.
So which means our 420 is falling under this range.
Okay.
So since it's falling under this range, what we already know is 365 is actually 20,000 and 20,020 rands. That's what the tax rate is on 365,000.
Oh, okay.
And then what you are looking for is what is more than 365,000, that is less than 550,000. So that's what you want to multiply by the tax rate that is applicable.
Oh, okay, I get it. Okay.
I quickly want to unmute the person. Right, I've unmuted the person. So that's basically how you get to it.
Okay.
So the first one says, for the first 79,000 that you make, you do not get taxed on. So when you see your taxable income, you must look at the ranges that you have in terms of your tax tables.
Oh, okay. Okay.
So
I get it.
yeah, the range that's applicable is linked to the amount that you must calculate.
Okay.
So this was very important for us to get, because this is where students as well miss most marks in doing this calculation. So I'm happy that,
All right.
yeah, let us move on quickly. Then the next part that we are going to is then going to be page 44. Page 44, we have already discussed to say a close corporation is considered as a company. Now, 3.5 is dealing with micro businesses. So that's another type of a taxpayer. It's called a micro business. Right. And then we're going to stop here on micro businesses. The next time that we are meeting, we are going to cover micro businesses, and then we are going to be doing questions on the provisional tax collection method. We're going to be covering the rest of Learning Unit 3. But the important things that we are going to cover is micro business, its 14-day rule, and the 18-day rule. So we're going to cover that in the next class. We're going to start by covering micro businesses, and then we're going to start attempting more questions that are on Learning Unit 3. So quickly, if you can be able to get to notes, if you can be able to get through your notes, which I'm thinking now if I've already shared this. No, I've not shared it. I am going to quickly share this on your notes. What I'm requesting is on the next 23 minutes, you attempt this question. It's called Activity 2B. And I'm going to be also putting on answers. So I'm quickly going to, the next time that we meet, this is one of the questions that we are also going to cover. On all of this, I'm going to share on your notes on my UNISA. So you will not now, but I'll be sharing it on your notes on my UNISA. Then you can be able to cover it there. So what we have unpacked up until today, I will also share it on the notes on my UNISA so that you can access it on the Western Cape page. Please, there is a feedback form. There is a link that provides where you can find resources and recordings under my UNISA. A micro business is not an SBC. An SBC, Karabo, it's a small business corporation. You can find it on page 42. Page 42 of your study guide. Page 42 of your study guide at the bottom. You will be able to find more information about small business corporation. So this is what we are going to be covering next time we meet. It is going to be the micro business and the provisional tax collection method. So that's what we're going to cover for the rest of that class. So is there any questions that you have on your side? Any questions? Right, the next class, Megan, is going to be at 4 o'clock to 5 o'clock. It's also, 5:12. It's going to be on the 8th of September on Tuesdays. So for consistency, I try to have these classes on Tuesdays at 4 o'clock up until 5:30. And then between 5:30 and 6 o'clock, we can take any questions that the students may have as well. Right. I am glad that no one has got questions. That means we can adjourn today's class, and I'll be quickly sharing the activities on my UNISA. If you can go on your charts, you will see the link that has been shared. I quickly want to share a link for feedback. If you can provide feedback, and we'll also share a link as well for attendance. If you have not been able to put on your attendance for today, we'll also put that in as well. Right. I'm quickly just going to share. So I'm just quickly going to put all the sources that we can share with you. And of course, the Excel sheet will also be there. What am I sharing? Sorry about that. Link for the attendance. It has already been shared before, but you can also try to have it as well. I'm also sharing a link for seeing the notes and everything. And most importantly, I'm also sharing a link for feedback as well, so that you are able to share for the feedback of how you found today's class. So thank you very much for attending. But if anyone has questions, I will still be available for the next few minutes. And after that, if there is no questions, then I will immediately close the session on my side. Thank you very much.
Mr.